Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden secrets of corporate filings. You know, sometimes these reports are like a good detective novel full of twists, turns, and a few red herrings. Let's see what clues we can find today. Dynamix Corporation III just dropped a report. And it's all about their big splash into the public markets with an initial public offering, or IPO. Think of an IPO as a company's coming out party, where it starts selling its stock to us regular investors for the very first time. They are a company that has essentially been born into the public eye, and this report is like their baby pictures showing us how they started. If you appreciate getting straight insights from corporate documents and want to join a community discussing these insights, make sure you are subscribed. We also have a Discord community linked in the description below where we dive deeper into these analyses. This filing is all about their IPO, which is a pretty massive event for any company. It's when they decide to go public, meaning their shares will be traded on a stock exchange. They're telling us that on the 29th of October 2025, they officially became a publicly traded company. So who are they? Dynamix Corporation III is the name of our company. They were incorporated in the Cayman Islands, which is a common place for companies to set up shop for tax and legal reasons. The report mentions their file number and an IRS identification number, just standard administrative stuff that helps regulators keep track of everyone. Now, let's talk about what people can actually buy. They're offering units. Think of a unit as a bundle deal. Each unit contains one Class A ordinary share, which is like a regular piece of ownership in the company, and half of a redeemable warrant. A warrant is basically a ticket that gives you the right, but not the obligation, to buy more shares later at a set price. In this case, that price is $11.5 per S-share. These units are trading on the Nasdaq Stock Market LLC, a big stock exchange. They also have Class A ordinary shares traded under the ticker Dynamix and warrants traded under DNMXW. The report also checks a box indicating they are an emerging growth company. This means they are relatively new and get to follow some less strict reporting rules for a while. It is like getting a slightly easier version of the grown-up rules, which is common for companies just starting out in the public market. This section is about the actual deal itself. On the 31st of October 2025, Dynamix Corporation III completed their IPO. They sold 20,125,000 units. And get this, they even sold an extra 2625,000 units because the people who helped them sell these shares, the underwriters, decided to buy more. Each unit, as we talked about, came with a share and half a warrant. They sold each unit for $10, raking in a cool $201,250,000 from this sale. That is a lot of money coming into the company right from the get-go. This section also lists a bunch of agreements they signed, like the underwriting agreement with Cohen and Company Capital Markets and various other agreements related to warrants, their sponsor, and investor trust accounts. These are all the necessary legal documents to make an IPO happen. Besides the main IPO, they also sold warrants privately. On the 29th of October 2025, they sold 6,275,000 warrants directly to their sponsor and the underwriters. This is called a private placement, meaning these weren't sold to the general public on the stock market. They sold these warrants for $1 each, bringing in another $6,275,000. These warrants are pretty much the same as the ones sold in the IPO, but this sale didn't involve any of the usual fees or commissions you see in a public offering. They used a legal exemption that allows them to sell securities privately without going through the full registration process. This part is about changes in the company's leadership. On the 29th of October 2025, in connection with the IPO, 3 new people were appointed to the company's board of directors. Their names are Diaco Vicky, Tyler Crabtree, and James Henderson. They were also assigned to key committees, like the Audit Committee and Compensation Committee, which are important groups that oversee the company's finances and executive pay. The company will cover their expenses and potentially pay them for their consulting work. It is pretty standard for new directors to be appointed when a company goes public. This section talks about changes to the company's foundational documents. On the 30th of October 2025, they officially filed their amended and restated Memorandum and Articles of Association. These are like the company's constitution, outlining how it is run. These changes were effective on the 29th of October 2025, the same day as the IPO. This is a necessary step to align the company's structure with its new status as a public entity. Regulation FD, or Regulation Fair Disclosure, means that if a company shares important information with some people, it has to share it with everyone at the same time. On the 31st of October 2025, Dynamix Corporation III posted an investor presentation on their website. This presentation likely contains information about their business plans and perhaps some forward-looking statements. The report notes that this information isn't considered officially filed with the SEC for certain legal purposes, but it is there for investors to see. This is where they put other important things that don't fit neatly into the other categories. A substantial amount of money, over $201 million, was placed in a US-based trust account. This money comes from the IPO proceeds and the private warrant sale. This trust account is a common feature for IPOs, especially for what are called special purpose acquisition companies, or SPACs. The money in this trust account is generally held until the company completes its initial business combination, which usually means acquiring or merging with another company. There are specific rules about when and how this money can be used, mainly to protect investors if the company doesn't find a suitable business to combine with within a certain time frame. They also announced the pricing of their IPO on the 29th of October and the closing of the IPO on the 31st of October through press releases. Finally, this is the list of all the supporting documents, the exhibits that are attached to this report. It includes all the agreements we've touched on, like the underwriting agreement, the warrant agreements, and the press releases. Think of these as the appendices to the main story, providing all the detailed legal paperwork. So, what's the big picture here? Dynamix Corporation III has successfully completed its IPO, bringing in a significant amount of capital. They've established their public presence, defined their initial structure, and set aside funds for a future business combination. The key for investors now will be how they deploy that capital and whether they can successfully execute a merger or acquisition, which is the ultimate goal for companies like this. The trust account structure is designed to give investors some peace of mind, ensuring their money is there for a specific purpose. The main risk, as always with these SPAC-like entities, is failing to find a suitable target within the allotted time, which could lead to liquidation. It is a high-stakes game, and the next few years will be critical for Dynamix Corporation III. Alright, that is our breakdown of Dynamix Corporation III's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this is a smart move for investors? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description to connect with other like-minded viewers. Thanks for watching, see you next time.